Hey everybody, I hope everyone is doing well and had a good day. And in this video, I'm going to review the Emini 5-minute chart for Wednesday, September 10th, 2025. Pretty decent gap up going into the day, so I do want to look at and see what the 15-minute chart looks like. It's generally what I'll do going into any day. So here's what we have, and back here, this was yesterday's close back here. So here's the Globex session. And we have a spike in tight channel. The channel evolved into a trading range with this bear breakout, but that evolved into a double bottom bull flag, which led to another tight rally. It's another bull breakout, hesitation at the new high, and then a buy climax, which to me looks like a second leg trap. Pretty strong first leg, and a very climactic, quick second leg. So I wonder if the bull breakout just before the open, this was on the 15-minute chart, says 8:45 a.m. Eastern time. I wonder if that's an exhaustive buy climax that'll lead to a trading range, and if we'll actually come back down to maybe close the gaps and maybe the low of the bar. And whenever there's a gap like this going into the day, I will look at the Globex 5-minute chart and start trading from there. So I do want to do at least a little bit of bar by bar for this video, and we're going to do it this way. So here's the same chart we were just looking at, although we were looking at the 15-minute chart. This is the 5-minute, so the tight bull channel, the pullback, and then the big second leg, possible second leg trap leading to sideways, which after a big bar like that is expected because the risk is big, so the bulls don't necessarily want to buy all the way up here with a stop down here. 1R is all the way up here. But there's enough momentum for at least a small second leg, so the bears don't necessarily want to sell either. It has led to a small wedge bull flag, small second leg testing the high close, and we're finding some resistance going into the day. So 3-bar micro channel, bear breakout on the open, probably sellers above bar 1. It's a weak buy setup, but testing support. So maybe a second reversal is a reasonable buy setup. Sellers above 1 expected, now it's a low 1 short. There's some room to the downside, but overall I think this is a trading range. It's probably buyers below bar 2. Sideways barbed wire, tight trading range, first 3 or 4 bars of the day. We get that second reversal, so spike break 2, resumption attempt, low 1 failed, 4 breaking out to the upside, second reversal. Maybe the bulls get a second leg after a complex 2-legged pullback. The bears, you could say this is a second leg trap as well. Leg 1, pullback, big, leg 2. Again, testing support, and the bull breakout may need a better second leg than this. But overall, it looks like a trading range. Outside down on 5, but 5, similar problem as 2, forcing you to sell relatively low. Overall, it's a little more bullish going into the day with the tight channel, but the buy climax really made things more neutral. But at this point, we're in the buy zone. If we look at the range of the big bull bar, here's the midpoint. You can see we're in the lower half. Traders will buy down here and sell up here, assuming it's a trading range. And right now, the price action looks like it's a trading range. Bar 6, second reversal. You can call it a third reversal. 1, 2, 3 attempts to reverse up. It's a strong bar. IOI, it's a breakout mode pattern. So we expect range expansion and a breakout at some point here. And it looks like it'll be to the upside, but it's a tight trading range. So as far as buying above 6, it's really not ideal. 7, bull breakout, but now if you're buying bar 7, you're at the top of the range. So the problem with bar 7 is testing resistance. It's at least leg 2, So maybe it's leg 1, leg 2, or 1, pull back, 2, pull back, 3. So it's 2 or 3 legs up to the top of a trading range. So even though 6 and 7 look strong, the context is not ideal. Strong enough breakout 7 for at least a small second leg, but because it's a trading range and it's a late leg, the upside might be limited. Follow through buying 8 and 9. It's enough for you can expect buyers below 9, 8, and the breakout point. Buyers below for at least a scalp. But still, the context not great for buying up here because it might be high in a trading range. So there's the buyers below 9, outside up. Bulls get their scalp for at least a small second leg. They're getting a lot of sideways bars, 8 through 11. And again, it's at least leg 2 high in the range. We're still not above all the bars to the left. So this is still a lower high, and that makes buying here fairly dangerous. If you buy here, where's your stop if you're a bull? Bulls either use a tight stop, they're trailing their stop, or the stop is somewhere way down here, which is unrealistic because you're buying at the top of a trading range in leg 3 or 4 at this point. You've had another pullback. So your risk reward is bad, and you're looking for a breakout of a trading range, which is generally low probability. So probably not ideal to be buying up here. So bear breakout 12, good context for the bears because it's leg 1 at the top of a trading range. The odds are if you sell here and scale in, you're going to make money. And a follow through bar 13, very high probability, maybe 80%, that this bear breakout and follow through gets a second leg, even if it pulls back first. So probably sellers above 13. Weak buy signal 14, probably sellers above. 15, micro double bottom. But look at all the overlap with 14 and 15 in the prior bar. This is a tight trading range after a strong enough bear breakout in good context for a second leg. There's probably sellers above 15. We're also testing the 12 close again. Since bar 12 got follow through selling, the close in the low of bar 12 is resistance. So if the market comes back here, you expect sellers. It comes back again, you expect sellers. The upside is limited. The bulls are not going to buy again until the bears get at least a couple of legs sideways to down. This breakout is too strong to be buying the first reversal, especially when the reversal is a couple of trading range bars that heavily overlap the prior bars. So probably sellers above 15. 15, maybe a sell the close bar. Low 1 short 16, probably good for a scalp. Stop order sellers below 16 is reasonable. And the bears get their second leg. Now if we look at the structure, bar 1 is currently the low of the day. Usually it does not remain the low of the day. So there's a magnet. It looks like it's going to be some kind of a trading range day or trending trading range day with all the trading range price action on the open. Here's the first 18 bars. Also, most of the time, the market breaks out of the first 18 bar range, the first 18 bars of the day. So at this point in the market, maybe 70, 80% chance the market breaks out above the high or below the low of bar 1. And there's really no decent stop order buy setup here. The bears have a breakout and a second leg, and you can say it's 3 pushes, 1, 2, 3, but it's really tight, and the buying pressure is weak. Look at the buying pressure. Since the bear breakout 12, you don't really have a strong bull bar, and you've got open gaps. So the expectation here might actually be at a certain point, we may get a bull give up bar, which is a bear breakout bar. A give up bar is where the bulls give up and they conclude, yeah, we're not getting enough buying pressure here. This is not a credible bottom, even though it's 3 pushes, and we're testing near the low of the trading range. We may have to get below bar 1, and since bar 1's a magnet and we're not getting decent buying pressure, the bulls will just step aside, and that can cause a sell vacuum, which may be happening on bar 20. but still no reason to buy here. Inside bar 21, it's a pause, it's a low 1 in a tight channel. Spike and tight channel for the bears. This is all a simple leg from 16 to 21. So the odds are the first pullback will be minor and lead to resumption down. And then there, 22 might be that give up bar. Now at this point, you can count a more symmetrical 3 pushes down. 1, pullback, 2 through here, which is subdivided into 2. Then a pause, 21, and then 3, 22. Also breaking out below the low of bar 1, testing the breakout point back here from the bull breakout. So testing support, 3 legs, low in the range. 22 is probably a profit-taking bar if you're short, and aggressive bulls will buy. This is one of those signals that my system would tell me to buy the close, and emotionally it's kind of difficult to do because you see this tight channel, you expect this bear breakout to get a second leg, but to me, the context here is a trading range. We've got 3 legs down, and we're getting a bear breakout testing support. So to me, the odds are we're actually going to test the high of bar 22 before we get a measure move down. So what I would do is buy the close, put a stop here, and a target at the high of 22. Bad follow-through bar. 22 is a strong enough bar that it may get a small second leg. So rather than buy the close 22, it might be better to take a second entry buy, maybe put a limit order at the close of 22 now that you see that 22 had no follow-through. And that would have been filled on 24. So I like that more, but that's not currently how I'm trading, at least not yet. Low 1 short, 24, but now it's leg 4, low in the range. So buyers below 24. Bulls looking for a second reversal. And minimum target, the high of 22. And they would reach it on 26. Now 26 is a second reversal. Second legs are context dependent. The way I see 26, you could say it's 2 legs up, 1, pull back, 2. But the way I see it, it's a second reversal. And I view second reversals the same way I view a leg 1. So I see 26 in a very similar way as I see bar 12. So to me, 26 is a buy the close bar. Market's still in a trading range. We're in the lower third. We have a bull breakout that's likely to get a second leg up. So buy the close, also scale in and look for a measured move up. And the bulls got follow through straight to the 1R target. And you can see the reaction on bar 30. This bear breakout still needs a second leg. The 3 pushes down. It's a really tight channel. It's a breakout on a higher time frame. Now we have this lower high rally to about the midpoint, 50% pullback. So the expectation was resistance there anyway, plus the 1R target. So a couple of reasons to look to sell here. But as far as selling after this many bull bars, it can be hard to do. But big picture, the bear breakout should get a second leg. The rally is testing resistance, and then bar 30, bear breakout strong enough for a second leg, reasonable to exit longs, and also reasonable to look to go short. But if you're selling here, the way I see this one, probably not ideal to use a stop above bar 30, because you may have to give this room, this bull breakout room, to get a second leg. And then the expectation to me is sellers above 30. So maybe it's sell the close, sell a pullback, maybe even sell the high of the bar and put a stop and measure move up. But in this case, the bears got follow through selling. Week high 1, 32. Sellers above, bear breakout and follow through, likely to get a second leg. Outside down, bears get their minimum second leg, but they're looking for at least 1R of the signal, and then the breakout and follow through, which brings you back to the bottom of the range. I'm going to switch over to the RTH chart at this point. We've seen enough bars. And the reason for that, I always like to look at the prior day's high and prior day's low. At this point, or in this context, we gapped up above yesterday's high, but it's still a magnet. The bears want the breakout to fail. It's a bull. The gap up is a bull breakout. The bull's got a small second leg, which is likely. Usually when there's a gap up or a gap down, I want to make sure I'm phrasing this clearly. When you have a relatively big gap going into the day, there's a good chance you're going to get a tradable second leg in the direction of the gap within the first hour, and that is seen here. Gap up, micro double bottom, the bulls get a second reversal, bar 6, and then tradable second leg up to bar 11. Day structure here, usually by bar 18, we've seen the high or the low of the day, and then we usually break out of the 18 bar range. At this point, we broke below the 18 bar range. We probably have seen the high of the day, but we have not necessarily seen the low of the day. If I remember correctly, recent average daily range is about 40 points. And this day is about 22 points at this point. So there's room to expand for sure. And the day could even double. But at least, it'll probably get at least this bear breakout will probably get, the low of this bear breakout will probably get tested at a minimum. So I said sellers above 32 likely, second leg down likely, bears getting their second leg, nothing to buy, sellers above with lower highs and lower lows. Bears have a target at the low, which was reached on 39. So bear channel, lower highs, lower lows. Bears are going to sell rallies like this and take profits at a new low. So now we're testing support. So down here, you can expect another profit-taking rally, or at least hesitation. So bull breakout 41, kind of similar to 26. It's a bear channel. You trade channels the same way you trade a trading range, only it's sloped. So you may look to swing in the short direction and more look to scalp if you're buying. But here, I think 41 is similar to 26. You can probably buy the close and scale in and look to take profits at 1R. And we got a big, small, big. Bull breakout 43. Range expansion, but testing resistance, not an ideal place to be buying. In fact, it's aggressive, but 43 might be a sell the close bar. If you're long, you have to think about overall context and the trader's equation, and theoretical stop is below 40. If you're buying 43, and remember, it doesn't matter if you're buying the close of 43 or if you bought the low tick, you bought below 39 and you're still holding on to the trade on the close of 43. It's the same trade. If you're holding on to a long position, then logically you're saying I'm willing to buy at this price at this moment. So 43, not ideal for buying because the risk is big, the stop is far, and overall it's still a lower high. And if you're supposed to trade a bear channel, like a trading range that's sloped, then you want to buy low and sell high, and we're testing resistance. We might be testing the bear trend line. We are testing this resistance here, the 34 high. Market turned down from here and got a tight channel. At a minimum, you expect hesitation here. Resistance is a price where you expect the market to hesitate or reverse down. But this is strong enough buying for at least a small second leg, likely. Bad follow through, start getting 2, 3 bars against you, which probably sell the close. 46, buying up here was dangerous. And overall, still, we're getting a lower high, and it's a bear channel, so we may get back down to a new low. And we ultimately did there. and found profit taking again. And pullback's getting relatively deeper. If we compare this one, this was about a 50% pullback. This one was about 80, 85%. So it's starting to maybe evolve into a trading range. And we have a stairs pattern. So when we broke out to a new low, when the market fell below 25 on 39, traders are going to buy here, because when we fell below this low, make sure I'm explaining this clearly and clear up some unnecessary lines. What happened when the market fell below bar 1? Bear breakout, but market reversed up, and the bulls could have made a scalp. That means if the market falls below 25, the bulls are probably going to buy and look to at least make a scalp, because it was possible if they bought that low and scaled in, they could have made money. If they buy this low and scale in, they're probably going to make money. Same logic applies to bar 40. So traders will buy here, but it's a micro channel in the direction of the trend. Now it's more clear, 3 legs down, so we may get a couple of legs sideways to up, and this channel may evolve into a trading range. So bulls will buy here. 49 is a reasonable bar to exit shorts above. It's a double bottom, it's 3 pushes, it's a wedge, and it's a pretty decent signal bar. It's probably going to get at least a small second leg up, and the expectation after 3 legs is a couple of legs sideways to up to correct the wedge. And the buy above 49 failed, went to a new low, but probably buyers at the new low. The dangerous thing about buying here is if you're buying against the trend. The market is technically in a bear trend. A bear trend is when there are lower highs and lower lows. If you are buying, you do want to buy at the new low. But the problem is the bears are more in control. They're selling rallies, and the bears are taking profits at the new lows, which is contributing to the buying. But once we get to a price where the bears are willing to sell again, they overpower the bulls. Second reversal attempt, 54, but a small bar, lots of overlap, and this is really not ideal. For buying, you're getting a lot of bars below the moving average. There's maybe room for a scalp, but the upside is probably limited. And a smaller wedge and a big picture wedge. 1, 2, 3. Third leg has 3 pushes of its own. So this may correct and get a couple of legs sideways to up. 57, low probability, stop order buy, small bar, small risk. So you have good risk reward, but structurally it's okay. You just have to make sure you're going for a reward that is several times your risk to justify taking the trade, because it's low probability did not trigger in this case. And I'm going to speed it up here. So we're collecting a lot of bars below the moving average. What happens, the way my system looks at this, once you get maybe 11, 12, 13 consecutive bars below the moving average, I start to view it as a trend. And when that's the case, I'm looking to take every bear breakout or every breakout in the direction of the trend. And I'm looking to fade breakouts against the trend, especially in late legs. So 58 would be a sell signal. 61 would be a sell signal, sell to close. You could sell 63 because the market's trending, and 80% of reversal attempts should fail. We're getting on 66, another sell, leg 1, leg 2, at resistance in a bear trend. So 66, another sell to close bar. It's a sell setup. Stop and measure, move up, sell to close, target the low of 66, and you get out in 1 bar. I mentioned the high of the prior day is probably going to be support. The market broke far above it, and there are trapped traders, in theory, at the high of the prior day, yesterday. So the downside here might be limited as we approach that magnet, getting increasing sideways through here. all these bars are heavily overlapping one another. The bear trend is not as strong as it could be, and this might be a tight trading range final flag. So the next bear breakout could be the last one before the market evolves into a trading range. And then a strong micro channel, but really late in a bear trend. This might be an exhaustive sell climax. Gets a second leg, but the downside might be limited. Buyers below 70, likely. And yesterday's high should act as support. So the downside here, unless the bears clearly break strongly below, probably going to start to go sideways around yesterday's high and bounce. 73 is another one of those second leg bull breakout against the trend. Leg 1, leg 2, sell the close. But getting so late in the day and in the trend, again, more overlap here. There's probably buyers below 73 and at a new low. Outside up 75, but now testing, getting close to resistance, testing an area where traders got trapped on the bear breakout. 75 a big bar, but might be 3 legs up high in a trading range. Not really ideal for buying. It might go a little higher, may get a second leg, but also considering the fact that it's late in the day, probably better to leave it alone. We went a little bit higher to the last major lower high, broke that. Once the market breaks above a major lower high, then at that point, technically, the market is either in a trading range or a bull trend. So the bear trend ends once the market goes above the most recent major lower high, when 77 went above 67. But there were always hints before that. I mentioned this could have been a final flag, tight trading range, many bars into a bear trend, near support. We get that breakout, another kind of small final flag, tight trading range, and buyers below. Obviously 75 a big, strong bull bar. So the buying pressure is increasing. You don't get bars like 75 in a strong bear trend. It's probably evolving into a trading range at that point. All right, that's going to be it for today's end of day review. Thanks everybody for watching, and I hope everyone has a great night.